Hello, my friends. Welcome to the Boring DAO Podcast. For today, we have something special planned for you as we have been talking to one of our Boring DAO analysts, Jonathan. Jonathan is extremely experienced in crypto. He has been working as a crypto hedge fund analyst before, is now an analyst for the Boring DAO. So he has a whole lot of experience that he has been sharing in today's episode. We have been talking about the current market situation, the outlook, how the pros conduct their research, how they come up with decisions, how they create their investment theses, and ultimately how anyone can be successful in this market right now, as well as position himself very well for the future. So there is a lot of value in this episode. I really enjoy that one, and I'm sure you will as well. So without further ado, let's hop into the episode. Hello everyone, welcome to the Boring DAO Podcast. Today I'm sitting here with Jonathan. Jonathan is another member of the Boring DAO. He has been a hedge fund analyst in the past, is now a crypto analyst. And in today's episode, we want to share his expertise on the market, his experiences. So without further ado, Jonathan, maybe introduce yourself. Tell us a little bit about your story, what you have been doing, where you got, how you got to be where you are today, and what you're doing all day now.
Hey everyone, my name is Jonathan. Like Lucas said, I was a crypto hedge fund analyst in the past. My background is actually in biology. That's what I graduated with a degree with. And right now I'm just trading my own money, pretty much what you would think of when you think of a retail trader. And I got into crypto around 2017 during that initial hype bubble. I remember reading about Bitcoin when it was around like $6,000 and it was in the news. And I really resonated with the idea of like having a free form of money that was separated from the government. And that's what really got me interested. I picked up some Bitcoin, some Ethereum. Then, like you fall down the rabbit hole. I dabbled in some shit coins, lost like 80-90% of it during that time. But for whatever reason, I just stuck around because I thought it was super interesting what was getting built. And then in 2020, we had DeFi Summer, and that's when I went full time into it. I had some big wins with some coins on Uniswap. I built a big position in Rune, and that was one of my first really big wins. And that's what allowed me to go full time and pretty much ignore everything else in my life and just do crypto. And now I'm here pretty much focusing on NFTs, as I think that's a sector that resonates more with people who aren't crypto native. And I see that gaining traction over the coming years. So that's what I've switched my focus to: NFTs, GameFi, that type of stuff. But I'm interested in everything. So yeah, that's my background.
Awesome. How do you think the experience that you had like in the crypto hedge fund helps you today in what you're doing in your everyday work life as a
Yeah,
independent analyst?
that was actually a really great experience because beforehand I really only had the point of view of like a retail trader. I was only talking to friends and trading that way. And then when I joined the fund, I got to get like an inside view of how some of the bigger funds operate, how they look at things. I got to talk to a lot of teams, a lot of founders, which was really great experience. Got to see how they think. Got to do some analysis on like the VC side of things, how people raise, analyzing product market fit, analyzing valuation. So that was like a really great experience for me that I took into my own trading. When looking at a coin, like, is it worth it to get in now? Is the FDV too high? Is the team legit? So that was actually a really great experience for me and something that I'm always gonna, remember and take with me.
Awesome. How for all the retail traders maybe listening and watching this, not knowing those experiences, where do you think are the main differences in how hedge funds or VCs trade compared to how the retail trader trades?
Yeah, it's actually pretty surprising. I think like people think it's really different, but when you get into that inside of the world, like it's really not that different. Like you think maybe there's a lot more going on in funds, but no, like they're kind of dealing since, this is crypto and we have blockchain, you could see everything that's happening, you could see transactions. So, we have a lot of the same information that's being shared. Sometimes they have an upper hand with like, some being able to talk to more teams, maybe being like talking to other large funds and seeing what positions they're building. But a lot of that can also be seen on the blockchain. Also, if you want to get into teams, you can go on the Discord and talk directly to them. You don't have to be at a crypto fund. So, there's actually a lot of similarities, and people think there's a lot of differences, and that's really not the case. So, like I would say, if you want to operate more like a fund, get into Discord, try to become friends with the founders, try to add value, and then, you're going to have a more in-depth look at how things are operating.
Okay, so mainly the advantages that the funds have over the retailers is just a better network connections, but you can build that even if you're a retail trader, if you're
Oh yeah,
investing the
exactly.
time.
Yeah, no, it's just about adding value. You can go on Twitter, you could do your research, share it with other people, and that's what people are really looking for, and that's what teams actually value too. Like if you're spreading the word and you're a smart person and you're writing reports and trying to get their name out there, they value that just as much as anything else. And actually, as a retail trader, sometimes you have advantages because maybe your bankroll is a little smaller and you could build positions into coins that at the time might not have a lot of liquidity, but you see the potential there. Whereas like a big fund, maybe they're operating 50 to 100 million dollars, and they want to invest 1 to 10 million dollars. They can't always do that in a coin that's really new and doesn't have a lot of liquidity, even if it's a promising coin. So they would have to do an OTC deal, or they would have to get into the seed round. So actually, as a retail investor, you have a lot of advantages where you can build positions that can really pay off later. Like, for me, when I built my position in Rune, I was buying it on the Binance stacks. And I remember like you could barely buy $2,000 worth at a time. So it took a long, long time, but that was it was about a 40, 50x gain. And as a big fund, you probably wouldn't be able to do that. They probably had to wait until, Rune was already $5 to $10 when liquidity was high in the market. And so a lot of the gains are lost by then. So, as a retail trader, you actually do have a lot of advantages. You don't have to look at it like, oh, only the funds are making money. Actually, it's, like a lot of the nons on Twitter, they're doing really well for themselves.
Yeah, definitely. I think especially as you say in these low cap conditions or like the low cap gems, you're definitely in an advantage as a retail trader for the reasons you explained. But it's also very hard to find those because I would say 99% of those low cap coins are probably trash. So do you have some tips there how someone can actually find the real gems? And maybe what are you looking at when you analyze a project to decide if that's real or if that's going to zero?
Yeah, it's a really good question. Yeah, they're definitely called shit coins for a reason. I think one of the things that matters is like you have to know in what type of condition you're buying in. Are you buying into like a raging bull market where almost anyone can go and launch a coin and then it could gain some steam, but there's really nothing behind it? So one of the most important things you have to look at is the team. Like, are they legit? Are they going to be around building for the long term? Are they able to secure a runway for themselves and secure their treasury? Like a lot of what we've seen in the past few months is a lot of teams have scrambled to dump coins on the market when things got really bad because they realized, oh shit, I only have 3 months runway, I only have 6 months runway. So you want to find a team that like, thinks far ahead, and you want to make sure they have a good head on their shoulders. And second, you want to make sure the coins you're buying, like they have actual product market fit, which is tough in crypto. A lot of it's speculation. I think we all know that, like, there's very few projects that like have a use case right now, and most of it's actually just even coins like Aave or Compound, stuff like that, like they do well because there's speculation in the market, and then when it leaves, they don't do as well because it's all borrowing and lending, and people are borrowing to buy more shit coins, to buy other coins. So, you have to think about, does this make sense? Like, are people actually going to use it? Like, a really big trend, or a trend that people thought was going to be really big, was DeFi options. And I also thought that was going to be big because I saw on Robinhood how, like, kind of like retail enjoyed gambling on the options. But then you have to ask yourself, like, are people actually using this? And then when you dig into the numbers, like, it's really a small sector of people that are using it. And so a lot of those coins didn't do well, even if they had good teams, even if they had like a good idea. So that's like the second big thing you want to look for. And then third, you just, like I said, you want to make sure you're not buying in the hype phases when everyone on Twitter is shilling and like all that type of stuff. You really want to make sure that you're not buying on someone else's word. You want to develop your own thesis for something. If you see someone else on Twitter that agrees with you, that's all fine and dandy. But like, you want to make sure you're buying something because you actually believe in it. And you want to develop your own thesis with an invalidation point and with a take profit point. So I would say those are like the big three things you want to do when you're shitcoin diving, if we're going to call it that.
Awesome. So you said you shouldn't be buying in the hype phase. I think right now we can definitely say we are not in a hype phase anymore. We have been suffering quite a bit. What do you think? Where are we in the current market cycle? Looking also at the macro scale, where we might be heading into a recession, or already arguably are in a recession. How do you see crypto being affected by this? Might this be actually the time where we can decouple a bit from the stock market, for example, or do you think we are definitely going to be for quite a while longer at the mercy of the bigger markets and the bigger market conditions? And where do you see this all going with the current situation?
Yeah, I want to precede all of this by saying, like, obviously, I don't think anyone knows for sure. I definitely don't know for sure. And that's where like coming in with your own thought process is really key. But I think right now, unfortunately, it's like, obviously we're already down 80%. Some coins are down 90, 95%. So not that we're just entering the bear market. I think maybe like we could be 25% of the way through. We could be 50% of the way through. I think there's some more pain to come because, like you said, the macro conditions are pretty awful. And if the economy is going to head into a recession, we got inflation rising, we got food costs going up, you have gas prices going up, you have wages kind of being like the same compared to the inflation and the cost of living. And I think crypto is really driven by the retail market. I think retail kind of starts it, and then what happens is funds kind of pile on, and then they push the prices up really high. Like if you think about starting a campfire, you could think of retail buying as like the kindling, and then the funds coming in are like pouring gasoline on it. So if retail doesn't have money because they're struggling with rent and they're struggling with food costs and gas costs, I think it's a stretch to think that crypto is going to decouple and just break away for no reason at all. Like crypto is on the farthest end of the risk curve, and so it's probably going to experience a lot of pain. And it's going to take some time for things to bottom out and to form a bottom and to stabilize. Like what happened in like a big lesson I learned from 2018, 2019 was stuff went down 50%, 60%, and you're like, okay, like that was a lot, like it's got to be a bottom here. And then no, it went down another 50%, and then you're like, okay, it could be a bottom here. But then it just, maybe it didn't go down too much more, but it just went sideways for 2 years, and some coins died, a lot of teams gave up. So like that's the problem with like knife catching your favorite coin in bad conditions. It's like you really don't know when it's gonna end. And if you're gonna buy something like right now that's down 90%, it's not a horrible time to start, dollar cost averaging in. But if you're gonna be doing that, you have to do it with the thought in mind that, okay, I'm gonna have to hold on to this maybe for a year or two. Like, are you able to do that? Do you have enough cash on hand to live? Are you dependent on the cash you're investing? Like, all these things need to be taken in mind before you just go along and, buy random coins, or even if it's a coin with like a lot of, future prop value, like you still have to think about, okay, we could be in a 2-year bear market. It could be a 3-year, like no one really knows for sure. Could be even longer. Like we can't just take history and say, okay, well, it was 2018, 2019, and then we started to rally in 2020. Yeah, like that did happen, but we were in a completely different macro environment. So if stocks see another 20% downside from here, I would expect that crypto experiences a lot more pain going forward.
Yeah, that makes sense. And I guess it also underlines even more the point you made earlier, how important it is to analyze the team and how much they are looking ahead. Because to get through those 2 years, they will need a runway. They will need to have secured the capital when the prices were high. And yeah, to survive this, and it doesn't matter how good their value proposition is and how good their idea is. If the project goes bankrupt within a year and doesn't make it to the end of the bear market, then well, it didn't matter at all that it was a great idea and a great team behind it. So I think
Yeah, no,
especially in this
exactly.
condition.
It's really important that like you find a really strong team, because crypto is it gets tough. Like when things get tough, it gets really tough. Like you have people in the Discord yelling at you. You have people saying like devs do something, everyone's giving you shit. Like, and a lot of devs, like they don't want to take hate 24/7. They might just leave. Like if coins are going down and you have to deal with all that stress, a lot of people are just going to give up. Like you could look at coins from 2017, 2018 that a lot of people thought maybe they're going to come back, and they never did come back. So you can't just say like, oh, well, the all-time high was, 50x from this point. Like if it gets there, I'm going to make 50 times my money. Yeah, hopefully that does happen, but like it's not a given. Like it's really dependent on like a lot of different things. Like in 2018, no one even thought DeFi was going to be a thing. Maybe like a few people who really killed it in 2020 knew about it. No one was really talking about NFTs. Like a very few amount of people were talking about it. So like you don't even know what the next trend is going to be. Like you can go right now and buy DeFi coins thinking, okay, this is going to continue to be the trend, but most likely it's going to be something completely different that we don't even know about. Maybe something like Stepin, where it's like a lifestyle to earn coin. Like we don't know. Like there's always going to be something new, which is why crypto is exciting. But it's also, you have to be careful just buying something because it went up a lot, now it's down a lot, and you think it's going to go back up a lot. It doesn't always happen. And if you want to make it in crypto, you really gotta, the name of the game is to survive. You want to survive with some type of money. And as long as you have some type of money to play with, like, you can make it back. So that's pretty much the biggest thing I want to emphasize is don't go and leverage up at thinking it's the bottom. Like if you get blown out, then you can't come back from it. So that's probably one of the most important things.
Yeah, definitely. Never get wrecked. The
Never get
protect your
wrecked.
capital is I guess, the biggest and most important rule. And
Mhm.
one thing I also like is what you said is like it doesn't have to come back just because it was up there. You often hear the advice like, oh, just buy the top 10 or top 20 coins, they're safe, they're good projects. But if you actually look at the coins that were up there in the 2017 cycle, like most of those coins are not around anymore or are much lower at lower prices or whatever. So just because a project right now might seem like a no-brainer to survive this, there might be during the bear market now projects appearing that essentially solve the same problem, but they're doing it much better. So they will take away the market share of those projects that were now big. So I think nothing is safe, right?
Yeah. One of the biggest mistakes I made in 17 was I bought the top on like, if anyone was around in 2017, you remember the coin icon, ICX. It was like branded as the Korean Ethereum. So people like piled onto it, like thinking they're gonna make the next Ethereum, blah, blah, blah. So I bought the top of that, probably went down like 80%. And I was like buying on the way down, buying on the way down. I was like, okay, it has to bounce eventually, like, stuff like that. Like it can't, it's the Korean Ethereum, I told myself, like it's gonna come back. And that went from like $12, I think, to like 30, 50 cents, like, and it had a slight rally in 2020, 21. Like I think it maybe went to like $2, $3. But like if you're comparing it to the new coins, like maybe you hit a five, like if you bought the bottom on ICX, okay, maybe you got a 5x, but you had Aave that went 100x, you had coins going 50x, you had Solana that went 100x. So there's always something new to buy, and you have to keep that in mind. Like, yeah, some stuff will survive, but most likely the biggest gains to be made are from something fresh that gets made in the bear market, or that's getting something that's going to get made right now or got released in the last 2 months. No one's paying attention to it. They're building, so yeah, you really want to not stick to what you know. Like try to go out there, do some research, and find something new that has a lot of promise to it.
Awesome. That's actually very interesting. So, because mostly you hear the advice like during the bear, just buy blue chips, stick with what you know, stick with what is famous. And you're now telling us the exact opposite, basically, right? So, I guess like Bitcoin as the real blue chip, you can say that's safe. That will probably not go away. Ethereum, you could argue that it's getting to be a blue chip as well, right? But other than that, really nothing you would say is safe, and probably the biggest gains would be made on new protocols. We don't talk about it yet. Is that kind of the narrative you're looking for right now when making your analysis, or?
Yeah, so like you said, like if when people ask me like, well, hey, what should I buy? I always ask them like, are you gonna be involved? Or are you gonna do you want something where you set it and forget it? If you want to set it and forget it, I would always position my portfolio to be Bitcoin and Ethereum dominant, and then you can maybe add some of the L1s you think will be the best. Like I personally think Solana will be around longer term. AVAX has potential to be around long term, but even those you could argue like maybe if Ethereum is able to scale properly, you have to ask yourself like, okay, like is there really a need for 20 different layer ones? Probably not. Solana offers like a different value proposition. It's built with a completely different architecture. It's built with a different coding language, so it attracts different types of developers. So that has something interesting going for it. They have a ton of funding. I would say their team is pretty strong community. But other than that, like I would, if you're gonna be someone who's involved, I would always say like try to look what's being built now, try to find something interesting that no one's like looking at the moment, because a lot of eyes have left the market. The hype is gone. People are starting to say crypto's dead. So like if you really want to make the large gains, like you're gonna have to get to digging and do a lot of research, and it takes a lot of time, don't get me wrong, but usually the payoff is pretty great. Like you could have bought Solana for under $1 in 2019, 2020. You could have bought a lot of the layer ones that did well, a lot of the DeFi coins. So if you stuck to what you knew in 2018, you probably got burnt. If you're one of the people who were looking forward and trying to find the new narratives, you did really well for yourself.
Yeah, that makes a lot of sense. Maybe someone listening this is like, but where do I find this information? Where can I do this research? What would you tell them? How can they start their journey to research and find maybe
So,
trends?
there's like some free tools and some paid tools. Like if you don't want to spend any money, I would say, something I did a lot of the time is I still do it, is I just go to CoinGecko and I'll go start from the bottom, like maybe start from market cap rank 500. You can start at market cap rank 1,000 and go one by one. And it's going to take a lot of time, but you might find like a really nice gem there, like that's really low cap, interesting value prop, like a good team. So that's something I would do. Like if you don't want to spend money. Another thing is to go into Discords and start to talk with people, try to network with people. Try to bring your own value. Don't just like be asking people to show you the next gem. Like you got to give them something in return. But Discord's a really great place. Like I said, you could talk to different teams, and they're pretty responsive most of the time. And that way you could start building a network so that when hopefully the next cycle comes around, you have some friends in the space who, you share alpha with them, they share it with you. So I would say those two things that are free you could do. Also Twitter, except Twitter has like, there's a lot of psyops going on. Like people are trying to sell you their bags most of the time. So you have to be careful. There's still good stuff to find, but you have to be careful with that. And then if you have a little bit of money to spend, I would say Nansen is the best tool to use. That's going to organize the blockchain in a fashion where you could read it. You could see what contracts are hot at the moment. So what's being used a lot. You could see smart token inflows. So what are the smart wallets buying? What are they selling? I find a lot of new coins doing that. It's also really great for NFTs. You could see what NFTs people are buying. You could see what wallets are holding NFTs. So, and it's not just for Ethereum. They just added Solana. They have BNB. They have AVAX. So, if you have about 100, I think it's about $120. If you could spend $120 a month, which is a lot for some people, but if you can make it work, you can get a lot of on-chain alpha, which is when everyone leaves the market and like you're on chain looking what's going on, like that, the stuff that people are really doing, they're not normally talking about until they've built a really big position and it's gone up a good amount. So if you want to get ahead of the curve, like you could see everything that's happening by looking at Nansen. And if you don't want to pay for it, you could try to become really versed in Etherscan. It's a bit harder to read, but anything's possible.
Okay, that's very interesting. Great tips here. You have been mentioning NFTs real quick, so maybe switching the topic a little bit and get into NFTs because I think it's very interesting. We had crypto bear markets, but we never had NFTs in bear markets. So it's pure speculation because no one knows what will happen to them. But what do you think? How will the NFT space develop now in the bear market, and how might it look like after the event?
Yeah, so I actually wrote a pretty long essay for the Boring DAO on this exact topic like a few months ago, talking about like what I really look for in NFTs. But yeah, a lot you gotta like a lot of people have to realize like 99% of what you see on OpenSea and all these NFTs, like they're most likely going to trend towards zero if liquidity continues to dry up. Like you said, it's even more speculative than crypto coins. Like there's no value behind them at all, but that doesn't mean they're not valuable. Like there's still, the reason why NFTs resonates with me is because I think that as we spend more time online, people are going to be spending more money on their digital identity and they're going to start to value it more. Like just like how someone might buy a Rolex in real life, someone might spend that same amount of money on a profile picture that has some type of prominence because they want to make it their Twitter pic, they want to make it their profile pic in Discord. And whatever people say, it does give you some type of respect. Like if you have a CryptoPunk or a Bored Ape, people are like, okay, that guy has a certain amount of money. Like maybe he got in early or maybe he has enough money to buy it, and then they'll listen to what you're saying a little bit more. Whether we want to admit it or not, that's definitely happening on Twitter. So like I think NFTs are here to stay. I think certain profile picture projects are going to be around long term. And again, like this is where digging into the team matters even more. Like you want to make sure the team isn't just, it's not just a cash grab that they did. Like you want to make sure like they're going to be around building long term. Like one of the projects I like the most is Clone X by Artifact. I think that's one of like the most solid teams in the space. Now they have that investment by Nike. They invested 300 million into them. But that Artifact's been around since 2017, 2018, like doing metaverse related digital fashion. And they're always like creating new ways to keep the community engaged. Like the airdrop they did with the monolith box came with the first ever digital Nike sneaker. And basically you're going to be able to take different skin vials, put them onto your shoe, breathe them with other shoes, and like create, it's going to be like sneaker collecting on steroids. So that's something I find interesting. I'm also bullish on NFT group passes. So you have Proof Collective, which is like around 80 ETH right now. That's the most well-known one. There's Admit One from G Money. You have Goda, that's I think it's led by Pharrell. So I think those are going to be something big in the future, like small group collectives where there's alpha being shared, there's benefits to holding the NFT. And like I think stuff like what Steppen did with the digital sneakers and then stepping to earn, while it's down a lot right now, like I still think they built something interesting. So those are like some sectors that I'm really interested in. But like if you're going to invest in NFTs, start slow, start small, make sure you're investing in good communities, teams that are going to be around long term, well-funded teams, and teams that have like a vision for the future, like not teams that are just following in the steps of other projects and doing copy paste type of stuff.
Do you then participate in AMAs, or do you just talk to the team and ask them questions in the Discord, or how do you find out more about the team?
Yeah, so you can always go to, start from their website, read about them, see what they've done in their past. Like a thing that happens is like people will buy an NFT and then they find out the founder did some shady stuff in their past. So make sure you can read about them, see what they've done in the past, but go into the Discord, talk to other people. It doesn't even have to be the team. Talk to other community members, see how they treat themselves, see if they're like helping themselves out. And like that's really like all you could really do is just, before you buy, maybe spend a couple weeks in the Discord, like just seeing how they interact. And you could even try to talk to the team. I'm sure there's like a moderator in there, if not the team, that'll answer all the questions you have. If they're avoiding questions and acting really rude, stay away from projects like that. There's no need to be in a project like that. If they're more than happy to answer your questions, that's a good sign. They have nothing to hide. So that's what I would say to do. And like again, it's not going to be a definite, something could always happen, but that's why I would say start small, start with what you could afford to lose, and go from there.
Okay, cool. Yeah, that makes a lot of sense, and very time consuming though, I think.
No, for sure, for sure. That's all of this is like, if you want to do well in this space, you're gonna have to spend a lot of time. Like it looks easier from the outside, like when things are going really well in the bull market, coins are going up a lot, things are easier then. But the time we're in now, it's the time to like really hunker down, put in the work, to do your research, to get involved with different people. And it's a lot of hours you spend with like no material payoff in the moment, but it's usually stuff that'll pay you off long term when you get into the Discords, add value, talk to people, do research. Like that's how you're going to build a list of coins to buy, like so that you're prepared when things do. If we crash another 30%, 40% from here, you want to be ready to buy coins that you've researched and coins that you think will be around long term. So it's definitely a lot of work. Crypto is a lot of work. It's a lot of mental strength that you need kind of to like stick with it through a bear market. And it's a lot of, during the bull markets, it's a lot of time spent on the computer, just, trying to find the next trade, trying to like, like all that type of stuff. So yeah, I would tell anyone that wants to get into it, it's definitely not easy. I think it's worth it, but don't come in with a mindset of like, I'm just going to listen to this guy on Twitter. Like, I'm just going to follow his trades. If you do that, you're going to get burnt every time.
Mm.
Like maybe you'll hit it one time, but like it's going to be a bad time eventually. So always do your own work and it'll pay off eventually, even though it might not in the moment.
Yeah, I think that's something a lot of people need to hear and probably don't want to hear, because like people always look for the easiest way and think like they're coming into crypto and like, oh yeah, I'm gonna like in the evening coming home and like buy some coins, buy some NFTs after work, and are willing to do 30 minutes of research, watch one YouTube video on Coin Bureau,
Mhm.
and they're like, oh yeah, that's a good coin, let's buy it. And it's if it was that easy, everyone would be super rich, right?
Oh,
So
exactly. Exactly. It's something that I've done too. I followed people's advice on Twitter, but that's why I'm saying this, because 95% of the time it hasn't worked out for me. Whenever I put my own work in, it usually works out for me. So yeah, it's hard, but like if you want to hit those big wins, you want to get a 5x, you want to get a 10x, 20x, it's going to require time and then sometimes a lot of patience of holding that coin. Like a lot of the time you don't buy something and then it goes up right away. Like, yeah, we all want that. But, for when I bought Rune, I had to hold it for, I think it was like 4 or 5 months until it started really taking off. And you have to ignore a lot of the outside noise. Like you could always sell it, try to trade something else, like chase the next trade. But that usually doesn't work out for most retail traders. There is some really good day traders and some swing traders on Twitter, but that's like a very small percentage. And that's also like you're seeing the winners on Twitter and that can get to your head. And you have to realize that the majority of the time, if you're going to try to day trade and just chase like pumps and chase the coins that are going up the most, you're probably going to lose money. If you stay patient and resist FOMO and keep yourself mentally disciplined, you're going to do a lot better. But like that's why this is all hard. It's not easy to stay mentally disciplined. Like you said, if it was, we'd all be rich, but it takes a lot of effort and skills to do that.
So we've been talking about the whole day trading and swing trading. Mostly that's done on derivatives portals, obviously. Um, do you stay away from derivatives completely, or do you maybe have strategies where you use derivatives to hedge positions? So when we're super high, open a short on a coin that you're holding just in case to protect yourself from downside risk? Or yeah, is it just staying away from the derivatives completely?
I mostly trade spot. Like I said, like trading spot allows you to be more patient because with derivatives, like on perp funding, you might be paying a lot per day, depending how big your position is. So, and then if you're using leverage, there's always the possibility of getting liquidated. Like it's happened to me where my liquidation price has been 50% away, and I said, okay, it's probably pretty safe there. And with, like the price has dropped 50% within 3 days, even during a bull market, so it's something that I've learned to just stay away from. Like a lot of my biggest wins have just come from trading spot positions or trading NFTs. So I think most people should just stay away from, like leverage trading and derivatives. Like it's usually not going to work out in your favor. Like there's really sophisticated players in that field, and you're basically going up against sharks. So I would always say like stay away. Like if you're in a position where you have like a coin like Atom or like how Luna was, where when you stake it, it's locked for 21 days and then it goes up a lot. I would say then, yeah, you can go onto an exchange and don't lever up, but like you could short some of your exposure with that just to protect yourself and try to lock in the gains. But like most of the time, like you're really going to be going against sophisticated people. And then like if we're in a bull market and you think something's gone up a lot and you short, that doesn't mean it can't go up another 5 times. Like I think the best example was Axie Infinity. You know, like it was at $3 and went all the way to 10. People said, okay, like it's got to be enough over here. Then it went to 20, 30, 40, 50. That it went all the way up to $150. You could have
Mm.
said along the way, like, this is too much, this is too much. But like during a bull market, there's no too much. Like it's you can never know what's gonna happen. So I would say like stay away from shorting, try to just trade spot. I know it's like really enticing to like go and short the market. Like if you have a really solid idea and you think like there's some metrics that you're seeing where you're like, okay, it's got to be over right now, like blah blah blah. Yeah, you could play around with maybe opening a short position, or maybe you could take a put position out with options. That way you're only paying the premium and you don't lose your whole like notional value. So there's a few different ways to do it. I would recommend most people just stay away from it, you know, protect your coins.
Yeah, that makes sense. Now, one very interesting thing here is you said it right with the XC example, how it just can always go up more and more and more, right? But we know it's important to also take profits, because if you bought at great prices and you didn't take profit in this bull run, you're probably back at where you started, or maybe even below where you started.
Yeah.
How do you do that?
Yeah, so
How,
that's a mistake I've made a lot. You know, like, and sometimes you can't even, you got to learn the hard way before you really do it. But when you enter a trade, you don't want to just enter blind where you say, I'm just buying this and I think it's going to go up. Well, let's try to set some take profits. Tell yourself, okay, if it goes up 2x, I take out my initial and then I let the rest ride until a 5x or 10x, and then I take some more out. Like you have to set some levels for yourself where even if the market is like going crazy and the hype is there and everyone's saying like this is going to go forever and you don't want to sell it, like that's why you have to make sure that when you get into the position, you do set some limits where you're like, I'm taking it out no matter what. I'm staying disciplined here. And even if it does go up a lot more, like you can get mad at yourself and you know it's gonna happen, but most likely like 6 months down the line, a year down the line, you're gonna be really happy that you took profits. And taking profits doesn't mean sell and then immediately invest in something else. Taking profits means take profits and keep cash. Like you don't want to sell something with a really big win. Like a rule that traders have is like don't trade right after hitting a big win, because you have like endorphins riding, you feel really good, like you could have like some type of complex going. So like you don't want to trade after a big win and you don't want to trade after a big loss. You know, you don't want to revenge trade. So if you do hit a big win, take some profit, move it into your bank, like, and just let the rest ride and then take profits on the way up and keep doing that. And then whenever you find the next really good investment, put some put some into it, but don't go all in. You know, like you want to build your portfolio over time, and you to do that you have to take profits on the way up.
yeah, definitely. How do you set those take profit levels? Do you use technicals, or do you use just simple things like my goal is a 4x and at the 4x let's take out my initial? How you set those levels?
Yeah, like first, like if the coin has like a price history like Ethereum, like I'll set some levels at a big resistance and tell myself I'm taking profit here. If you don't want to get into technical analysis, like you don't believe in it, I personally think it's a really great tool. But if you don't want to do that, you could just set arbitrary levels where you say, if it goes up 2x, I take this amount out. If it goes up 4x, I take this amount out. Like that's a fine way to do it too, as long as you have some type of plan. Like the biggest thing is just make a plan. Like it doesn't have to be too complicated. It doesn't have to be based on some crazy indicator. Like you just want to have a plan that's set and follow it, be disciplined. Don't change it in the moment. Like whenever the price goes to your take profit. Don't be like, okay, I'm not selling here because I think it's going to go up more. Like that's how you're going to lose. So just make a plan and stay disciplined, and it'll work out in the long term.
Awesome. Now, we're a Cosmos DAO, so I'm wondering, where do you see the Cosmos ecosystem during the current market conditions, like in the bear market? What's happening? Is it a narrative you're looking more into, what's happening in our ecosystem for when it goes back up? And yeah, just like a general sentiment on Cosmos in the current market conditions.
Yeah, I think Cosmos has like one of the best chances to be like a layer one that's coexisting with Ethereum. Like you want to like look for things, layer ones that are doing something completely different, and that's what Cosmos is. Like Cosmos is built on a completely different architecture. Like I think most people saw like the DYDX news where they're moving from an Ethereum L2 to Cosmos because of all the benefits it offers them. So I think Cosmos is one of the best in interoperability. You know, like the IBC bridge is one of the safest out there, especially with all the bridge hacks going on. Like IBC has proven to be a lot safer than the rest. It's really easy for app chains to communicate with each other, and like that's kind of like, you know, the future I see for crypto if we like wanted to succeed is like you need these chains to communicate with each other really easily, and like you need the UI to be really easy for people to understand. Like if it's not easy for them to understand and not easy to use, like then we're not going to really get that like global adoption that we're all hoping for. So I think Cosmos is probably like one of the best positioned for the future, and like something that everyone should keep an eye on. Like I think DYDX proved it. You know, it started on a layer two for Ethereum, and they looked at everything that's around and they said, you know what, Cosmos offers us the best chance to like grow as a DApp. So I think that means a lot. Cosmos has some of the best devs in the space. That even after the Luna collapse, which was like a big hit to Cosmos, like they're continuing to build, they're not giving up. So I would definitely recommend like everyone read about Cosmos and, you know, SDK and how it works and like all the chains that are building on it right now.
Awesome. Yeah, I agree, especially with the thing that you said about UI. Because in the end, our main competition isn't internally against other crypto projects, whatever it is. Like the main competition is Web 2, right? Because we want to get the users away from Web 2 to Web 3, right? And we can only do that if we can offer them the same amount of a user experience that is as good as it is on Web 2, as seamless. And at the moment in crypto, it just isn't. Everything is much more complicated. It takes much more steps with the wallets and everything. And I think that's where Cosmos comes in, because if you're on a layer 2 from Ethereum, you still need to use an Ethereum wallet. You still need to, you still have to pay gas fees and whatever it is. Like you cannot have the complete flexibility to create the user experience you truly want. And on Cosmos, as you get your own blockchain, that's kind of what you can do. So I think what makes Cosmos special is that really the dApps that develop on it can create a user experience that is not matched with any other blockchain. So
yeah, 100%. I totally agree with that.
Awesome. I think that's a great place to actually wrap it up. We went through a lot here, covered a lot. I really like this talk. If people want to reach out to you, where can they find you? What are your social links, maybe, or something if you might share?
Yeah, so I'm Yoni Baloney on Twitter. I'll have the profile picture of a robot clone X on there. I'm on Discord too. I'll pull that. My Discord name is Yoni, so it's YOKNEE 7. I'm in a bunch of different Discords, so you'll probably find me in like different NFT Discords. But yeah, so Yoni Baloney on Twitter, Yoni on Discord. That's like where I'm spending most of my time. And then yeah, you could find my Boring DAO articles on there. If you have the Boring DAO website, you could find me through there as well.
Awesome. Awesome. Yeah, we'll definitely also make sure to link your Twitter account in the description of this show. And then thank you so much for taking the time. It was a pleasure. And yeah, talk to you soon again, hopefully.
Yeah, I had a great time. Same.
And that's it for today. Thank you so much for tuning in, everyone tuning in and benefiting from this value. It really means a lot to us. Thank you so much. If you enjoyed this show, if you found it valuable, please make sure to subscribe to the channel to stay up to date with future episodes and smash up that like button to show the algorithm that there is value in this episode. Thank you so much for the support and now have a great day. Peace out.